As I do every month, I'm investing another 1,000 euros, and today I'm buying a total of 5 different stocks. As always, we'll start with the performance comparison, and here we can see that in recent weeks, prices have gone down, both for my portfolios and for the major indices. So far, since October 2024, I've achieved a return of 24.2% with my community portfolio. Here's the black graph. And with that, I'm tied with the German Light Index, which is at 24.24%, so together, we're sharing second place. In first place, shown in purple, is my main portfolio with 34.7%. But even with that portfolio, things have gone down quite a bit in the last few weeks. Up here, we see the purple chart. I was already at 42% return, but now it's down to 34.7%. Overall though, that's still just a slight decline. It's also quite common in an investment career to experience drops of 10, 20, 30, or even 50%. Even Warren Buffett has had to endure such major price losses of 50% from time to time over his long career. What really matters is that the long-term average return is significantly higher. It's positive and ideally better than the market. I've personally been investing in stocks as a value investor for over 10 years now, often in small, unknown companies, and have managed to achieve an average annual return of just under 15%, without investing in the big hype stocks that also carry a lot of risk, but rather in value stocks that, in my view, are attractively priced, where the opportunities are relatively high but the risks are low. And that's exactly what I plan to keep doing for the next 10, 20, or even 30 years. And for some time now, you've been able to follow all of this here on my YouTube channel. So if you're not a subscriber yet, feel free to subscribe to the channel, activate the bell, and you won't miss any of my analyses or my purchases in the community portfolio. Back to the performance comparison. In fourth place, shown in red, is the S&P 500 with a return of 18.55%. And in last place, in orange, is the MSCI World from iShares here with 14.83%. But the returns for all 5 have been good so far, especially considering that I only started all of this in October 2024. So all of them have at least 14 or 15% returns or more. That's a very good performance. The average performance of the MSCI World over the next 20 years certainly won't be 15% per year either. And the performance of my main portfolio is also very unlikely to be 35% per year. So you really have to look at how things develop in the long term and not put too much focus on short-term returns. And now we'll get started with the portfolio update. I'll go through some individual positions in my portfolio here. I'll briefly cover what's new, which ones I'm adding to, and at the end, of course, I'll also talk about my new purchases. This time, I'll combine the additional purchases in my portfolio with the updates, so we don't have to jump back and forth like before. Let's just start with Worldline. There was something new here, but with a portfolio weighting of only 0.76%, it's a very small position for me. I'm down 70% here. It just kept going down and down. I keep mentioning that this is a very high-risk position, which is why it's weighted so low in my portfolio. And my average purchase price was 6.47 euros. Right now, it's at 1.91 euro. And that's why, of course, it's by far my smallest position. And as we can see here, there was a capital markets day just recently, and they published their targets through 2030. They want to grow by an average of 4% per year in terms of revenue in the years 2027 to 2030. They also want to generate a positive free cash flow starting in 2027, which should amount to between 300 and 350 million euros in 2030. And what's also being done is a capital increase of 500 million euros, and even existing investors who already have significant investments here, they are participating in this capital increase. They are investing a good 100 million euros, and the remaining nearly 400 million euros will be sought or raised on the market. And the previous major shareholders, who we can also see here in the back, as mentioned, are taking about 110 million euros in new shares at a price of 2.75 euros per share, which is significantly higher than the current price of just under 2 euros per share. But the capital increase of 500 million euros is also really huge. If we take a look here into the X-Station 5 from XTP, here we have the current market capitalization at 530 million euros. So with this capital increase, they're basically doubling the market capitalization. As an existing shareholder, you basically end up owning only half of the company compared to before. At the same time, of course, this also brings new money into the company, of which you also own a share. And here we can also see the long-term stock chart. The price was once over 35 euros. Then it dropped rapidly from 2023 until my purchase here in November 2024, down to about 6.20 euros. Then it briefly went up by about 30% to over 8.50 euros again. And since then it has continued to decline, which is why I'm currently so far in the red with this small position. But now I want to double it. I currently have 53 shares. I'm buying another 47 shares, so I'll have a total of 100 shares, and that will cost me 90 euros. So it's really just a very small purchase. And the nice thing about XTP is that you can make even such small purchases completely commission-free. So here, 0 euros commission, and I'm making a purchase here, and the order has been executed. This is my first purchase for today, and 4 more are still to come. And if you also want to trade stocks commission-free, then I can recommend the Broker XTP. Here, we can buy a wide variety of products, over 7,100 stocks on 14 different markets worldwide. And all of this is at 0% commission. We can trade up to 100,000 euros per month. After that, there is a commission, and we can also start trading commission-free with as little as 10 euros or even 10 US dollars. And XTP offers a lot more than that. For example, you can also trade fractional shares. You can set up ETF savings plans as well. So if you're looking for a new premium broker, just give XTP a try. The link is down in the video description. Next up, we're moving on to Novo Nordisk. I actually made a dedicated video about it not too long ago. So if you're interested in learning more, feel free to check out that video on my channel. There was another drop recently, a significant decline in the share price. That's actually been going on for a while now, since June 2024. The price dropped back down to around 39 euros. After that, it shot back up by about 35% to 52 euros. We can also zoom in here for a moment. And most recently, there was another drop of about 25 or 26%, down to just under 40 euros. I've been adding to my position here from time to time, and I want to do that again today. So far, I own 27 shares, and I want to buy 3 more shares for 118 euros and 70 cents. That way, I'll increase my position to 30 shares. And with that, Novo Nordisk is one of my top holdings. After the purchase, the weighting should be around 9%, roughly estimated. But let's continue with another stock, which also had some news. My second smallest position here is Volkswagen. Volkswagen holds a large stake in Porsche AG, and there was some news about Porsche that I want to briefly mention as well. There are, for one, some positive updates here. Record deliveries in the US, as well as in overseas and growth markets. And in addition, the CFO says, we've further sharpened our strategic focus. Now we're consistently implementing the clear decisions we've made. We expect that we passed the low point this year and that Porsche will noticeably improve starting in 2026. Like many other car manufacturers, there are of course a lot of challenges here that VW and Porsche are also facing. But I'm confident that Porsche, with their strong brand, which is still extremely popular in the higher price segment, will be able to generate good profits again in the future. But it also has to be said very clearly that Porsche is incurring additional one-time costs due to this strategic realignment. And those amount to about 5 billion euros, which is not a small sum, even for Porsche. And that's why there are, of course, some negative aspects here. But many of these negative factors are already reflected in the stock price. But due to the intense competition in the automotive industry and the high level of investment required, Volkswagen also has only a small weighting here. Currently, it's 2.9% of my portfolio. Next up is Alibaba. With Alibaba, I'm up about 80% since I bought in at 80 euros. Now we're at 145 euros. And there's also some news here regarding the share buyback program. In the last quarter, they bought back 2 million ADS. However, it seems they also issued 2 million new ones, so the number of outstanding ADS or shares hasn't changed. In the previous quarter, the number even went up a bit. And you can see here that share buybacks have been significantly reduced in this middle row, because a year ago, over 60 or even 70 million shares were being bought back each quarter. Back then, a lot of the free cash flow was put into share buybacks. Now, the company is investing everything in AI and is cutting back on share buybacks. But I also see this as a risk, because while AI investments have the potential to pay off someday, they are initially very expensive and come with a lot of uncertainties. And the share buybacks, which create long-term value for shareholders when stock prices are low, have now been scaled back, which I also don't think is a good move. And I need to think in the near future about whether I should sell my Alibaba position. If I do that, of course you'll hear about it here on my YouTube channel. There was also some news from Amadeus Fire, the small German personnel service provider. My current weighting here is 8.55%. I'm down 30% here, and this is a cyclical company. Right now, things are going very badly in the personnel services sector in Germany. That's why, over the past few months, I've been buying shares from time to time, basically going against the cycle. And I want to see how things develop over the next 5 or 6 years, when a new cycle eventually comes around. And when the industry is doing much better again, there's a chance that the stock prices will rise significantly. That's the investment case here. But of course, I can't say how long it will take until the cycle turns around again. And here, on the 28th of October, they announced that they are confirming their annual forecast for the current year, but are still, of course, facing problems in the current market environment. And that's really nothing new. They won't be making any significant profit this year. Net profit will probably be around 0. And for me, that's not really the deciding factor here. What matters much more to me is that things go well when the industry picks up again. And then hopefully the stock price will rise significantly. Or of course, the company will make much more profit, just like in previous years when these cyclical phases turn upward again. Next, I'll move on to my second largest position, which is Kaspi. I'm currently down 22% with them, and they make up 12.54% of my portfolio. The latest quarterly figures just came out on the 10th of November, so these numbers are very recent. And here we have a nice overview of how the quarter went. In the payments segment, revenue grew by 10% and net profit by 12%. In the marketplace segment, revenue even increased by 24%. But net profit only by 7%. And in the fintech segment, They also achieved 24% revenue growth, and net profit grew by 15%. This means that for the overall business, there was 20% revenue growth and 12% growth in net profit. And here we always see the small numbers. Kaspi notes that these figures are without the special effects. So, without the external special effects, they would have had 23% revenue growth and even 21% net profit growth. But I would be cautious about taking that number at face value. There are special effects that Kaspi has, where you could say, okay, maybe those will be better again next year. On the one hand, it's the entire area of smartphone sales, because there are currently supply issues for smartphones in Kazakhstan. And as a result, Kaspi can hardly sell any smartphones, which, as mentioned, leads to a decline in both revenue and profit. I hope that will improve again next year, but other problems in the area of taxes and regulation aren't so easily resolved. For example, the digital tax in the e-commerce and fintech sectors was increased in Kazakhstan, so these higher taxes will also take effect next year and in the years to follow. Accordingly, the outlook was also revised downward a bit. Previously, net profit growth of 15% had been assumed, but now it's only 10 to 12%, and without these external factors, it would have been 18 to 20%. So I would say, without external factors, which in my view really should be reasonably taken into account, you might be looking at around 15%, and that's fine with me. I'm curious to see how things go next year. I hope things continue to go well, with growth, high profits, and then hopefully a dividend again. And what they're already starting now is a share buyback program worth $100 million. But if we look at the market capitalization of $14.4 billion, a $100 million share buyback program is actually quite small. So I won't really take that much into account here, but I'm still going to buy more here. I've kept buying more as the price has fallen, and even now I want to buy at least one more share, which will cost me 65 euros and 60 cents. I'll click confirm now. And with that, I've just increased the number of my shares. I had 27 shares, now I have 28, and I'll move right on to my next purchase, which is PayPal. After the big price drop, I've already been buying more PayPal shares repeatedly over the past few months. Down here, at prices around 55 to 65 euros. Let me zoom in here. Right now, it's back at 57 euros. And here I'm also buying 2 more shares for about 115 euros. And I won't go into much detail about PayPal here, since I just recently made a video about PayPal. And now we come to my last purchase, which is Fiserv. Fiserv has had a phenomenal downward run, currently down 75% from February of this year until now. The price dropped from $237 to $60. And most recently, there was another price crash of about 50% in a single day. That's really, really extreme. Here, I want to open an initial position. I'm buying 10 shares for about 550 euros. I click confirm, and here too the purchase was executed. If you're interested in my analysis of Fiserv, feel free to check out this video. And I'll see you next time with the German value investor.